Due to long-standing mistrust in the country's financial sector, rising loan defaults and the failure to return depositors' money, Bangladesh Bank has initiated a move to cancel the licenses of 20 non-bank financial institutions, NBFIs. The central bank has issued letters to these institutions seeking explanations and has asked for responses within 15 days. Currently, there are 35 non-bank financial institutions operating in Bangladesh.
Mona Lisa Heavy Flow 15 পিস প্যাকেটের সাথে 8 পিসের একটি প্যাকেট একদম ফ্রি।
Among them, 3 are state-owned, 12 are under joint ownership between local and foreign entities, and the rest are privately owned by local individuals. According to the latest data for Bangladesh Bank, 20 of these institutions are suffering from severe liquidity crisis, with default loan rates exceeding 80%. The institutions that received the notice include CVC Finance, Bay Leasing, Islamic Finance, Meridian Finance, GSP Finance, Hodge Finance, National Finance, IIDFC, Premier Leasing, Prime Finance, Uttara Finance, Aviva Finance, Phoenix Finance, People's Leasing, First Finance, Union Capital, International Leasing, BIFC, Fairest Finance, and FAS Finance. The crisis in the sector began with the corruption of the infamous financial scam mastermind Bashundhara P.K. Haldar. He embezzled thousands of crores of Dhaka from multiple financial institutions. Institutions like International Leasing and People's Leasing were involved in P.K. Haldar's irregularities and are now virtually bankrupt. As a result, depositors are now getting their money back, and the sector as a whole has lost public confidence. As of the end of September 2024, the total outstanding loans in the NBFI sector stood at 73,663 crore Taka. Of this amount, 26,163 crore Taka was classified as a non-performing loans, accounting for 35.52% of the total. By the end of December, the NPL figure slightly decreased to 25,089 crore Taka, representing 33.25% of the total loans. As of December, the 20 identified institutions held deposits totaling 22,127 crore Taka, while their total loan disbursement stood at 25,808 crore Taka. Of this, 21,462 crore Taka was classified as non-performing loans. An internal report by Bangladesh Bank has emphasized the urgent need to restructure the sector. Possible measures include merging or liquidating the troubled institutions. The notice sent to these institutions highlights issues such as capital shortfalls, inadequate assets, high levels of classified loans, and failure to maintain minimum required capital. Bangladesh Bank spokesperson Arif Hossain Khan stated, "Not all institutions are weak. Some NBFIs are performing well, but overall, the non-performing loan ratio remains very high. Therefore, the Bank Resolution Act and the PCA Prompt Corrective Action framework need to be implemented in the NBFI sector." Muhammad Golam Sarwar Bhuiya, chairman of Bangladesh Leasing and Finance Companies Association, said, "In the last quarter of the year, some institutions have intensified loan rescheduling and recovery efforts. However, the non-performing loan ratio remains alarmingly high." According to experts, without increased transparency, accountability, and supervision in the NBFI sector, restoring confidence is impossible unless correct individuals like P.K. Haldar are brought to justice and funds are recovered. The affected depositors will not get their money back. Furthermore, financially sound institutions will also face crisis if comprehensive restructuring of the entire sector is not undertaken. Ummerumman Kranti, Daily Sun.
For more updates, follow us on Facebook, subscribe our YouTube channel. Get the latest update on www.daily-sun.com.